Hi traders, welcome back to another YouTube video. So you've seen a lot of traders on YouTube talked about trend continuation strategy. A lot of them say, I'm a trend continuing trader. I follow the trend. I buy pullback. I sell retracement, whatever. But the big question that a lot of newer traders have might be, so how do I know when do I enter a pullback? How do I know if the pullback is going to an end? How do I know what kind of pullback am I looking for? Shallow pullback, a deeper pullback, whatever. So in this video, I'm going to teach you some of the common pullback patterns that you will see in the market from a day-to-day basis. All right, so let's straight go into the chart. And if you look at this chart right here, so let me just tell you there are three different types of pullback. Okay, so the first type is what I call shallow pullback, or sometimes we refer it to flag pattern. All right, flag pattern derived from this kind of pullback pattern. Why? Because when price is in a very strong momentum, as in, let's say right now we are pushing up very aggressively, we form high highs, shallow pullback, push, shallow pullback, push. All right, this kind of pattern often happen in a very strong trending condition. All right, you need to understand when it comes to trend trading, there's not just one type of trend. There are different types of trend that you can look to trade. This kind of trend is what I usually trade on the lower time frame. So what I do is, let's say I identify that the market is in a clear trending condition, as in the market is moving upwards or downwards very clearly. Then I'll jump onto the 5-minute chart and I start looking for shallow pullback like this, like a mini flag there. Then I take a long, I have my stops under the flag low, my entries around there. I anticipate a breakout. All right, this is what I call shallow pullback. So these types of pullback are very easy to trade because it's hard for you to get stopped out. Unless your stop loss is really tight like this, then you might get pinged out for no reason. It's really easy to trade. So second types of pullback is what I call a healthy trend. All right, when price is moving into one direction healthily, which means we will have time where we have stagnation in the market. As I assume we form high highs, we pull back to some of these key support area, then we continue to push up, then we respect this previous resistance, now turn support. We continues to push up, form support, continue to push up. Okay, so there's a big difference between these two types of trend, because on the second type, as you clearly see, we have a much more identifiable entry. All right, let's say price is moving up, then you have a clear support that is being tested, or resistance that has been broken now turns into support. So which one is easier to trade? I'll honestly tell you the second type is a lot easier to trade for beginner. Okay, this type of trend do not happen very often, because those are usually caused by either news or they're caused by a breakout. Let's say what is a breakout, which means we're in a range, then all of a sudden we have a break above that range, and price usually run very strong for maybe multiple days in a row. Okay, so second type is where you see a market just move into one direction very steadily with nice impulse, nice retracement, nice impulse, nice retracement. So it's easy to trade. So how can you trade this kind of condition? You can use the moving average as well. So three different types of pullback, or three different types of trending condition, use different types of moving average. The first one, you have to use the extremely short-term moving average, like the 8 EMA, like 20 EMA. Usually when price is forming shallow pullback, it will test the 8 or 20 EMA very nicely, something like this. All right, it will bounce off them very nicely. It's very clear, easy to trade. It's hard to get stopped out as well. Second type is a little bit more tricky, because it might pull back to the 50 period moving average before we continues to bounce. Okay, easy. So how do you maximize the probability of success on this kind of trend trading setup? Is to utilize multiple confluence, like the EMA retest, like this support and resistance retest, like clear structural break, etc. Okay, then the third type is what I call deep pullback. All right, deep pullback is exactly the type of trend that I like to trade. Why? It's because the risk reward profile is huge. If let's say price is moving into one direction, sometimes you will see price forming things like this. We have deep pullback before we continue to run. So in this area, we might have some minor resistance supporting this area. Or let me give you one more example. Maybe we have things like this. Seems like it's breaking, and that exactly attract a lot of breakout trader into the market just to see what price stop them out, pulling back to some of this minor area before the next wave up. Okay, so what are the common mistakes that I see new traders make is that they expect a trend to just follow SNR. So there are times where price just doesn't respect them. Example, if we look at the live chart here, for this one, let me see, this is what I call a strong trending condition. Can you see we have shallow pullback, continuation, we have shallow pullback, continuation, shallow pullback, continuation, shallow pullback, continuation. Okay, so strong trending condition like this, or what I call type 1, requires some sort of moving average to actually guide them, and I like to trade them but on the lower time frame. I don't really like to trade strong trending condition like this on the high time frame because you can't really see anything. If you're looking at the 4-hour chart or the 1-hour chart, you can barely spot any entry. Okay, so if I turn on the EMA, this is the, let's put a 10 period EMA. Okay, can you see how price just bounced nicely off the EMA? Right, that's because we're in a strong trending condition. So under what condition do I consider type 2, which is a healthy trend with a medium pullback, is in condition like this? All right, can you see how we bounce off the 50 period? So the red line is the 50 period EMA, exponential moving average. We bounce off very nicely. We have decent pullback, decent retest of some of this break of structure. Can you see that? Support turns resistance, support turns resistance, then we have the continuation. Type 2 is fairly easy to trade because you can always line them up with more confirmation. All right, so let me see if I can spot any type C, type 3, which is deep pullback. So something like this one. These type of pattern are fairly tough to trade because it sometimes will caught you off guard, and in the sense that you think it might turn back into a downtrend. Then you go short, then all of a sudden it goes all the way up. All right, that usually caught a lot of people off guard. If you look at this one, price is in a nice trending condition. All of a sudden, it just seems like all the buys are turning off, switching off, boom. All of a sudden it plummet very aggressively, then reverse all the way up. All right, so type 3, which is a deeper pullback trend, usually is slightly harder to catch. Okay, but remember, the deeper the price pulls back on a strong trending condition, the higher the risk reward profile. Okay, as compared to this one, every time when price does a deep pullback, your initial or your first barrier is at the previous swing high, which is right here. Okay, so if let's say you think in terms of risk reward, maybe this one give you a 1 to 2, 1 to 3. Shallow pullback is a complete different thing, because in a nice strong trending condition, we usually trail our stops. We allow the position to develop. We don't care much about the next resistance structure, because the next resistance structure could be very, very far. But how about type 3? If you look at type 3, the minimum risk reward you can get is usually very, very high. That's because once price pulls back deep, it tells you that if you are correct on this one, the first barrier, where is the initial barrier that you will face on your long position, is right here. It's at the high. So the risk reward wise, this is a lot better as compared to type 2. So which one should you trade more? I'll say just try to learn all of them, because all three of them gives you good opportunity, but of course you need to master in one type of trend that you're very good at, so you don't fall into different traps or make a bunch of silly mistakes. All right, remember, trend is usually how you make most of your money. Okay, trading the trend. So if you do not know how to trade a trend properly, high chance you cannot really see your profitability, you cannot really see your growth, because good trader, a flexible trader, they can trade across different conditions. They trade reversal, they trade a range, they trade trend. But if you are looking to become a specialist, which is if you're looking to gain consistency right now, if you're still in your learning phase, then focus on one type of market condition that you like to trade the most, then dig into what are the different variations, just like this one, 3 different variations on trending continuation trading. Okay, so I hope you learned something new from this video, and if you like the video, please don't forget to like, share and subscribe, and I'll see you in the next video. Take care. Bye bye.